Welcome to the Sykes Bottom Line Pharmacy Podcast, your regular dose of pharmacy CPA advice to fuel your bottom line, featuring pharmacists, key vendors, and other innovators.
Your accounting is a mess. There's no need for you to stress. Go online and
all right, guys. Well, this week we had some big news come out of Washington, which was unexpected. I can tell you from our standpoint, CPAs tracking Washington, this one really came out of left field, surprised a lot of folks. The Inflation Reduction Act of 2022, very political divide here. 51 Democrats and independents, I think 2 independents voted for this bill out of the Senate, with Kamala Harris, VP, breaking the tie vote. No Republicans signed on to it. Goes to the House this week, expected to be passed by the House Friday. Is that the 12th of August here? And so I guess we got a new tax bill. It's looking that way. That's going to come
more tax fun, right?
More tax.
Yeah, I was hoping we were going to finish out the year without anything new, but.
Can I say this? Some people have said, hey, we haven't seen a lot of new videos. Well, there hasn't been 100 changes every week like last year.
That's true. That's true.
But now I guess we got to kind of gear up to see what's going to be happening pretty soon now.
Yep.
So,
this kind of brings back a little PTSD, I must say, because through the COVID crisis, the bills that were being passed and the changes was just overwhelming. And thank goodness we specialize here with pharmacies, because we could take those bills and look at it. How does this impact pharmacy? If you're out there servicing all kinds of industries, I can't imagine how folks did that. But so anyway, we're here with a new bill. Looking like it's going to get through. President Biden will sign that most likely. It does have some healthcare components to it, which the NCPA has pushed out some of their content on what they're learning and going through there. So that should be interesting to see how that all unfolds for sure, because there's quite a bit in there, Kendell, with with healthcare.
The NCP, they have a good article, came out August 7th. The Senate Democrats passed climate tax and healthcare bill. What are the implications for pharmacies? So definitely I would check that out. I did notice that it seems, even this just came out 2 days ago, there's still some changes because they include this $35 cap in there. But my understanding is that cap didn't make it through. So it's ever evolving. But that is a good article to check out.
Mm-hmm. Certainly is. But on the other side, outside of the healthcare, a lot of tax changes or updates in here as well. So just want to run through a few of those here on today's call. And Bonnie, we'll start with the 15% corporate minimum tax on financial statement or book income. Now, this doesn't apply this is not going to apply to your pharmacies, but this does create a whole host of concerns here for CPAs and the AICPA and reporting reasons.
Just so everybody know, why would it not apply to pharmacies, you think, just to make sure address that?
I believe it's $1 billion is the kind of the cap on who this applies to. Now, that being said, who's to say this doesn't completely change to $1 million one day, right?
Right.
So this could
get your foot in the door with part of it. It can change those thresholds.
They expand, and then the whole game could change because now you're mixing the accounting side that's usually independent of all congressional tax items. So now you're mixing these two. So in my opinion, this is not a good thing. Tax policy and accounting policy and procedures and things like that should not be mixed. So that's a concern.
I agree.
Especially if this, continues to expand, which it wouldn't surprise me.
That is an interesting point because bringing out, it says financial statement income.
Yep.
So generally, from a tax perspective, your tax income, financial statement income can be two completely different things. Like, for example, one thing that's kind of swept a lot of our clients, a lot of people in the pharmacy industry is their accrual to cash adjustments. People kind of get a little confused what that is. And that's basically you're able to have the accrual for your financial statements and then your cash basis for tax. So in this right here, this is saying that regardless of any tax adjustments or tax savings type things you do for tax, you could still be taxed based on the financial statement income. So that is just to kind of clarify. That's,
Can you imagine how
earth shattering,
difficult and muddy that's going to be for us if that comes into fruition there? Wow.
It's a mess because now you're going to have accounting policy that's going to be interconnected with congressional debate and policies, and these things need to be independent. So it's gonna be interesting how that unfolds. Also, we got the 1% excess tax on corporate stock repurchases. Nothing, obviously, for pharmacies there. They did keep in the carried interest rules, which is raising the revenue for this bill, which pretty much lengthens the long-term capital gain treatment for these hedge fund type entities. Let's see here. What else we got in here, guys? We got... I'll tell you a big one. Now, this one's going to impact pharmacies. So this needs to get the attention of pharmacies here. There's $45.6 billion of additional funding for IRS enforcement. The plan being they're going to hire 87,000 auditors.
Wow.
And that's going to open up, and this has been a hot topic in the accounting community here, tax community. Now, this is going to open up a flood of audits and costs for taxpayers to defend those audits. And so intrusion, if you want to call it, it's just really going to pick up. Now, when we look at the $45.6 billion of enforcement for the IRS funding, only $3 billion for taxpayer services. And if you're a pharmacy out there right now, everybody knows the IRS is a complete upside down in terms of taxpayer service. Can't get on the phone. The list goes on and on with the IRS taxpayer services. So $3 billion for that
right now,
$46 billion for enforcement. Totally lopsided, in my opinion.
Yeah, the taxpayer services.
Yeah.
For example, they said that I saw on the AICPA update that 10% of calls were actually received currently. So that means
that actually sounds high.
Yeah, no. So if you have a notice, and there was a lot of erroneous notices sent out regarding payments and things like that, where the IRS sent notices and it's not actually accurate, and then you try to get on the phone with somebody, only 10% of the time can you actually get through to a human being, let alone to resolve the issue, just to get through. So that's been huge. And Scotty, I got to pick your brain a little bit more. So you said it, but I want you to kind of clarify. You said the opening up audits is going to be a big expense. How is an audit, when you get audited, how does that create a big expense, just in case people
you're going to have
never experienced an audit?
You're going to have to hire your CPA. All these taxpayers out there are going to have to hire their CPA to defend them in their audit, and prove their innocence and prove what they've reported and all that good stuff. So that can cost
correspondence.
Yeah, that can cost some a lot of money, especially if you get
even if everything's okay, you're still
even if you are totally clean,
for the
you
help.
Still have to go through this whole process. Not to mention if a mistake happened to be made or there was an error somewhere, the penalties and interest that you'd have to potentially make up there. So, and of course, sometimes there are some fraudulent items out there. That's important as well. Very important, but taxpayer service, come on. I mean, even the Congress knows all about taxpayer service issues. Congressman with some of our clients have been involved fixing IRS issues. It's been so bad. So I was hoping to see more on the taxpayer service side. I mean, they're still using computers from the 70s. There's a lot of work there.
Yeah, definitely. And I think that's why sometimes we'll get a letter from the IRS and clients say, hey, we got this letter. What's it about? Sometimes it's about something we've already answered and sent correspondence to the IRS 5-6 months ago. And they just haven't gotten to it yet. So it's hard to believe, but sometimes we get letters about things that should have been resolved almost 6 months ago. So yes, huge issue. Huge issue.
It is. Mm-hmm. And Bonnie, we got a lot of clean energy in here. Your favorite topic.
There is. Well, yeah, there is this is the biggest investment in climate and energy to date, it says.
It is.
So,
there's a lot in here. I guess a few notables for pharmacies would be the clean energy and efficiency incentives for individuals. So the energy property, it credits energy efficient home credits. So there will be a lot to unpack here, and there's been a lot of the credits already out there are being expanded as well. And in addition to the clean vehicle credits as well, you'll be able to get a credit for a electric vehicle, even if it was previously owned, which is new. Yeah.
Wow, that's good.
So there's going to be a lot in here to unpack, and some of these obviously will impact some pharmacies out there.
Yep. Lots of opportunity. We just have to see the details when it's all finalized.
So, also want to mention the if you are a compounder out there getting into compounding, Bonnie, this reminds me of one we talked to the other day. That R&D tax credit could be something for new compounders, or any compounders really, but for new ones, you can use the credit against payroll tax. They've expanded in this area. So new compounders out there, definitely pay attention to that. That could be an area that is important to you for sure.
Yes.
And I think some of those items that listed from the healthcare perspective that are included in the budget, obviously we're more tax and accounting, but long term they could have some impacts on what we're seeing with drug costs. Sure. But I think that's left to be seen. There was a mention that there's going to be some negotiating prices that's going to be able to be done for Medicare Part D. That starts in 2026. So
some caps on some out-of-pocket expenses and things like that.
Caps on out-of-pocket expenses for those Medicare Part D beneficiaries who are seniors at $2,000 per year starting in 2025. I guess you could wonder if, hey, are they going to increase the drug costs in other places that they're losing in one area? That's something that'll be seen, and we'll kind of wait and see how that impacts. But definitely is going to be interesting to see in the next decade or so how these changes actually impact the pharmacies at the independent level, because all of these things are scripts that are being filled at our independent local neighborhood pharmacies.
That's right.
Absolutely.
So the bottom line, I think we're there.
The bottom line,
Scotty?
The bottom line is we got some new tax stuff and healthcare stuff.
Yeah, I think the bottom line for the tax perspective, 15% is not going to impact most of the pharmacists watching us unless you're making $1 billion. So I think that's the bottom line. You see that?
Call me. And we'll
teach us how to do it. Yeah. So,
but it could have some impact later down the road.
It could. And the IRS enforcement issue versus the taxpayer services, we'll have to see.
That's not a positive for anybody.
We'll have to see what happens
all
there.
the way around.
It is crazy,
Yeah, especially
46 billion for enforcement, but $3 billion for taxpayer services. I mean, you think it'd be like,
maybe once they get in there, they'll move people around.
well, it's in there. You have to spend this money on funding for IRS enforcement.
Oh,
I guess if anybody's taking stances, we see a lot of tax returns never been audited, but you look at it and it's not right.
Well,
exactly.
If you take an aggressive stances, well, there's $46 billion investment to start looking at stuff. So I think that's another bottom line too. Just because you haven't got audited,
you might want to reevaluate your
pay
risk.
attention to your
just because you haven't got
pay attention to who your accountants are and what you're doing and the stances you are taking, because
that's how I always did it. Might not be the same because
there's going to be some knocking on the doors, it looks like, for a lot of folks here. And of course the energy credits, and we'll do, guys, I'm sure we'll do some episodes kind of breaking down those energy credits as we learn more about those and see how those are going to impact pharmacies in particular. And I'm real interested to see about the clean energy items and for the pharmacies buildings themselves and see how that falls. But yeah, got a lot here, more work to be done to learn about, but we'll be sure to break it down for you guys out there. And for the Bottom Line Pharmacy Podcast, Scotty Sykes, Kendell Harris, and Bonnie Bond, and we will talk to you next time.
Your paychecks, check. Your QuickBooks, check. Your checks, yes.